has checked your business credit report. Look, the reality is a lot of people are checking your business credit reports and you don't even know they are. It's even beyond just lenders and credit issuers who are using these reports to make all kinds of decisions, including if you should be approved and how much you get and the rates and terms you'll pay. But it's also suppliers. It's also insurance companies. It's also law enforcement. So many people tap into credit reports that you don't even realize are being used. And today we're going to decode this whole thing. We're going to talk about what's on these business credit reports, what lenders, credit issuers are looking for, who else has access to them, what they're using this data for. Look, there's all kinds of crazy things happening with your business credit reports. And by the end of this training, you're going to know what they are, you're going to know how to control it, and you're going to know what steps to take to make sure that everybody that's looking at these reports see the information that you want them to actually see. So first of all, you got to expect when you're applying for financing for lenders to pull your business credit reports. Now, the reason this is surprising to a lot of business owners is because they're never told that their business credit reports are being pulled. So in the consumer world, if somebody pulls my consumer credit report, a couple things are going on. First of all, they have to have my permission to do so. See, there's a law that was created in the 1970s called the Fair Credit Reporting Act. And the Fair Credit Reporting Act regulates a lot of things that happen with consumer credit, including who and when they can pull my consumer credit report. So in order for somebody to get my consumer credit report, they have to have my permission. Secondly, if I'm denied credit or financing and they used my credit report to make that decision, they have to notify me by mail in writing that they turned me down, why they turned me down, and what credit report they used to make the decision. This is why we get this mail. This is, hey, I'm Chase, and we, didn't approve you. We pulled your Experian credit report. We didn't like your utilizations. Well, they have to. That's the law. But here's the deal. There's no Fair Credit Reporting Act in the business world. It doesn't apply. So this means anybody can pull our business credit reports without our permission. This is why if I go, and I'll show you what I mean right now. If I come in right now today and I go into Dun & Bradstreet and I say, hey, I want to get a Dun & Bradstreet credit report. So let's look at this. Dun & Bradstreet credit report, right? Let's say I want to come in and get my Dun & Bradstreet credit report right here. See a report. Okay, so here we go. The very first link we click, okay, products for small businesses. Let's see if we can find credit reports. Here's credit reports right here. We want to, let's say credit reports. You can see right here, the very first category they're asking us. Do we want to check our business credit profile or do we want to check another business's credit profile? Experian, Equifax, they're all the same. The very first question they ask us is, do we want to pull our own credit report or that of somebody else? So this goes to show that anybody that wants your credit report can get so. It could be a lender, a credit issuer, supplier, an insurance company. It could also be a competitor. It could be a prospect that wants to do business with you. It could be somebody that's looking to acquire your business. It could be a client that's got questions about your credibility. This is public information. So you got to keep in mind the Fair Credit Reporting Act only for personal credit. Anybody that wants to look at your business credit reports can. Not only can they, but it's actually the first thing that the business credit reporting agencies ask is, do you want to look at somebody else's or look at your own? By the way, if you don't mind, if you're just coming in, tell me where you're coming in from. I always like to give you a shout out and be able to say hi. Okay, so this is part of the underwriting requirements when you go to get credit financing. It's just part of what they do. Okay, it's how they mitigate risk. It's how they determine credit worthiness. You have to keep in mind, business credit reporting agencies gather all this data from all these different sources. Then they put it in a report. Then they have all these algorithms they've spent millions and millions and millions of dollars creating that are all designed to depict the risk of the person borrowing the money, paying it back. Now, if that's the world, if there's a company like a business credit reporting agency that gathers all this data from all these sources, puts it in a report, and then has 5 different scores that tell you the risk of lending that person's money, wouldn't you get that report if you're a lender, especially if you can spend dollars to get it? Of course you would. This is why, whether you're told or not, lenders are almost always pulling your business credit reports. They are kind of crazy not to, because of what the reports are designed to do, which is tell them your risk of default. So this is how they mitigate the risk. It's how they determine, should you be approved? How much money should they give you? What kind of rates and terms you should pay? Three very important things. I talk to a lot of business owners that don't get approved as much as they'd like to. They get denied. I talk to a lot of business owners that get approved, but they don't get as much money as they want to get. And I talk to even more that get the money they want to get or don't, and they pay way higher interest rates than they should. All three of these are directly correlate to your business credit quality. So if you want to get approved, if you want to get more money, if you want to be able to get the best terms, this is where business credit becomes absolutely essential to do all those things. Now, of course, you've got to improve your fundability. And we talk a lot about this in the training. There's 125 factors that actually tie into this. The foundation of fundability is just like showing you have a legit business. It's having a business address or a virtual office from a place like Regis. It's having a separate phone number for your business and a website and an email address and a license if you can get one, and a business bank account, and making sure all the information about your business is congruent, and creating a social media page. It's just the basic credibility of your business versus somebody that's using their mobile phone as their business phone and their home address as their business address and no license, no business bank account, right? I mean, they don't even have a website up. Their email address is a Gmail email address. This is a night and day difference between these two scenarios in a lending environment. So we've got to set up this fundability to make sure we have a legitimate business. And we also need to have business credit scores. Look, what's crazy is that reporting agencies like Experian and Equifax will give you failing credit reports and scores because you have no credit. And I talk to business owners about this all the time. They come in a panic because they got denied. And the reason they got denied was because they don't have any business credit reporting. And the bureaus gave them a low score because they have no credit. So you're going to get a business credit score when you're in business for years, whether you like it or not, whether you build business credit or you don't. It's just a matter of whether you control it and build positive credit and build a positive credit score, or you don't control it and the bureaus give you a failing score because you're high risk because you don't have it. It's going to happen either way. It's just a matter of whether it happens by default and it's bad, or whether it happens intentionally on your part and it's good. And that is a night and day difference between being able to come in and get approved for the money that you want to get approved for. Now, Texas, you didn't say Dallas, you said Texas in the house. KN is coming in from California. Thanks for saying hello. And we're also dropping links like this on how you can monitor your business credit as well. Anthony Williams from Fort Worth, Texas is in the house. He says, guys, if you just give me a shout out, I'll give you one the same. Always like to say hi. So you also got to keep in mind that they need to see that your business is separate from you as the owner. Okay, so many of us start businesses and then we commingle everything. We use our personal bank account. We use our personal address. We use our personal phone. They don't want to see that. They want to see that you've literally set up a separate business. And that's why the business address and the business phone number, the business website, the business email, it's so important. It starts this separation between you and the business, which also is important as you get away from personal guarantees. Okay, a lot of business owners are surprised that they're required to personally guarantee everything, but all their stuff is commingled. And they don't do a very good job of separating. The minute you separate, now you got a separate business address and a phone number and an email and a website and a license and a bank account. And now all of a sudden you got a credit report for your business. As you start to do this, you create this separation between you and your business where lenders and credit issuers look more at the business and less at you. And that's where you get away from personal guarantees. There's a reason Michael Dell doesn't guarantee the credit that Dell gets. It's not because Dell is big. It's because Dell has hundreds of accounts on their business credit reports. Dell has done a very good job of building large amounts of credit. And now their credit report is way more valuable than Michael Dell, right? Michael Dell might have a $50 million home mortgage on his house. I don't know, maybe he does, maybe he doesn't. But Dell has hundreds of millions in credit lines. They've shown a greater ability to pay high amounts of debt back than their owner did. It's why the owner eventually gets away from guarantees and the business can stand on its own. But it can only ever happen if you're actually coming in and creating the separation and especially creating a business credit report. Now, here's a little secret from lenders' perspective. Business credit reports are used for a lot of purposes. It's kind of like their dirty little secret. But here's the issue. The issue is they're not designed for us. They're designed for banks. And that's why there's a lot of things on business credit reports we don't understand. We don't understand why the credit limit isn't on the credit report, but yet instead the highest amount of credit we've used is. Because as a consumer, like, we want to see what our limit is. But as a bank, they want to see how much of the credit you've been issued you're actually using. That's more important to them. And that's why business credit reports are very interesting, because they show us from a lender's perspective what's important. They weren't created for us. They were created for lenders and banks and credit issuers, suppliers, to make decisions based on the data. So as a result of that, okay, a lot of cases, the lenders are using this data to make all kinds of decisions about us. We're not even familiar with the data because they really weren't designed for that purpose, okay? Lenders want to know it all, and they'll look everywhere they can think of to get it. But that's what's nice about the reporting agencies. Their job is to do it. Their job is to minimize where lenders need to look, because the reporting agencies have done all of that work for them and populated it into a credit report to make it easier for lenders to make decisions. Now, some lenders will deny funding if you don't have business credit and your business doesn't look legitimate. Okay, that's why business credit profile builds trust. Remember, I talk a lot about fundability, but I spend a lot of time talking about one of 5 sections of fundability, which is your foundation. It's the setup of your business. It's making it look legitimate. But if we expand out fundability, we look at things like your business credit reports, your check systems credit report, your LexisNexis, your D&D, your Experian, your Equifax. We look at all these. Having this credit improves your fundability and helps you build trust with lenders, because it shows that you're more fundable. It shows that you built business credit. It shows that you paid people as agreed. It shows that you've got credit from other sources that report that credit, and you've paid those sources as agreed. It shows that you're using the credit. It shows the limits you've been given. And the more you do that, the more the risk factors go away on the business credit reports, and the more lenders see credit reports that are fundable, that are lendable, where they actually want to turn around and give you money. So if it does not affect your approval, well, it may affect how much you get, rates and terms. So look, a lot of lenders, and I have a stack of denials from a source called OnDeck. OnDeck's the biggest lender in the cash flow financing space. This is the fastest, easiest money you can get. It's high risk merchant cash advance rates. You can get the money in 24, 48 hours. Even the highest risk lenders deny people because of business credit quality. Okay, one of my buddies the other day got denied for an auto loan, and he got denied because of his business credit quality. Now, at first, we thought it was because he had a negative item on his Experian credit report. We found out it's not. He got denied because they pulled his Equifax, and his Equifax credit report doesn't even exist. There's nothing there. Here is no credit established, so we got denied for bad business credit. I see this all the time, hundreds and hundreds and hundreds of times, again and again and again and again and again. People get into $1, $2, $3 million businesses or higher. Then all of a sudden they get denied for a loan, denied for this, denied for that. Because of business credit quality, they come to us freaking out. And it's not that their business credit's bad. It's that they just never built it. And they never really felt it was important enough to build. Now they're getting denied, or again, they're getting approved for lower amounts than they want to, or their terms are way higher than they actually want to get. And as I jump in and say hello to everybody else coming in from Georgia, Virgil's coming in from Georgia as well. Give me a shout out. Tell me where you're coming in from. I will show you exactly what this looks like on real business credit reports, because I like to do this. I think it makes a lot of sense to dive in and see from a lender's perspective exactly what I'm talking about today. So let me go ahead and just pull up a couple of credit reports here, and I'll go through and show you exactly what I'm talking about. So we can see here that we look at an Experian commercial credit report. We can see it's public information. I can show you the company I pulled it from. Doesn't matter. Anybody can access it. It's publicly accessible information, right? We also see here what I already referenced. Somebody that I'm at the bottom of the report. I can't scroll down. All these are zeros. The person literally has zero. We can see here, this is their risk of going bankrupt. That's what this score depicts. You can see how high of a risk they are of going bankrupt, all because they have no credit, right? Failing credit score. I see these reports all the time. This is what gets people denied. And we can also see here that the credit bureau even says the number one issue, the score is low, is the person doesn't have the trade lines. And also, they don't really like the person's industry as well. And here's another one that's interesting. employee size of business. You see, what happens is when the credit bureaus don't have the data they need to properly gauge risk, they rely on other things, which is very surprising what they rely on. If they don't have your financial data, like your tax returns, to determine the financial health of your company, what they default to is kind of shocking. They default to employees, how many employees you have. So when you file your annual reports and you say have 0 to 5 employees, you don't think anything about it. You just click 0 to 5 and move on. But the credit bureaus see that as a very high risk business, a business where they don't have financial data. There's very few employees and no business credit established, very high risk. And you can even see that here. This is a very high risk business. Why? Because they don't have any credit. And they don't have very many employees. They're too small of a business to even be set up legitimately and credible. We can see that. But here's what else is interesting. What else is interesting is right here. Credit limit recommendation, $1,000. Credit limit recommendation on another credit report, $2,500. Credit limit recommendation on another credit report, $16,000 roughly. So what we see here is the credit bureaus are telling lenders how much money you should even be issued in credit. So you can see clearly that credit reports have a lot to do with how much you get, because they're even telling lenders and credit issuers how much you get. And it's not just that they're telling them somewhere on the credit report. There's this little box here. See this box? Top left. You can see it's important. Matter of fact, Experian thinks this is the most important box on the credit report. And when we look at what's in this box, we see 3 points of data that Experian thinks is the most important. We see first the IntelliScore. This is based on how you've paid your past bills. It's almost always a 28 or a 29 if you have no history. Okay, we also see in this top box a financial stability risk score. This is a score we saw was almost as high a risk as you could get. It depicts somebody's likelihood of shutting down their doors, ceasing operations, filing bankruptcy. So this is saying, hey, this business owner has a higher low probability of going out of business. Then they're also saying how much money we should be lent. So the overall quality of somebody's business credit determines, in a lot of cases, if you should be approved or denied. Your credit score right here, your IntelliScore, oftentimes calculates into what kind of terms you get, what kind of interest rates you pay. And of course, the credit limit recommendation directly ties in to being able to get the highest amounts of approvals. Okay, so this is why the credit reporting agencies feel this data is the most important. North Carolina is in the house. Doing business too is in the house as well from Georgia. We've got a lot from Georgia. Mr. Crystal is coming in here and saying hello from Miss Crystal. Hello, Miss Crystal from Crystal, Mississippi. Thanks for coming in and thanks for saying hello. So we can see credit reporting agencies think this information is really important. Lenders think it's really important to determining these 3 things. So what you could do, well, you got to build a fundable foundation. Today's not the training for that. Okay, I've got plenty of fundability training. You could just Google fundability, go to YouTube and search fundability, go to creditsuite.com and search fundability. I map out everything you need to know about fundability, show you our fundability matrix, the 125 factors that you need to look at, things like setting up your business entity, getting your EIN, setting up your business bank account, those kind of things are very important. Then you've got to build business credit. A strong business credit score and profile is essential to being able to getting the best terms on insurance, the best credit cards, getting approved for the best terms. And this is something that in one of my masterminds, I sat with a guy the other day and said the same thing. He goes, man, I should have talked to you because I went and got this American Express card and I really should have talked to you before I did. I don't know if I did the right thing. And this is a really common thing when you're a business owner. You got a card, but did you do the right thing? What I mean by that is I said, well, let me ask you a question. Does the credit card you get, did it report to the consumer credit reporting agencies or business? He said, I don't know. I said, okay, well, did you attach a personal guarantee and a personal credit check to it, or did you not have to? He's like, I don't know. Okay, well, did you get the best term you could have got or get the highest approval amount that you could have got? I don't know. That's the problem with not following the system, is that anybody can go get a credit card. But if you go get a Capital One Spark card, you might not realize that they report to consumer and commercial credit. So when you use it, you hurt your personal credit. Or you might think that the $2,500 limit you got was the highest you could get, but it was high because they looked at your personal credit and it's banged up. If you would have not let them look at it and built business credit, let them look at that, you would have got 25,000 versus 2,500. Or all of a sudden you pay a 15 or a 16% interest rate on a credit card when you really could have got 12 because your business credit scores weren't high enough. So you've got to build this fundable foundation so lenders start to see that your business is set up credibly. And we want to start to work with vendors that report to the business credit reporting agencies to show that we've got trade lines, to show that we've got history, to start improving all of these areas. And if I go back and look at what we just looked at before, if we look at this guy here with no credit, really high risk, really low scores, really low recommendation of credit, then we start to move up in the world here. Now, here's somebody with a 96 score. Here's somebody with a 555 financial stability score. We see now they're really low risk. We see, and look at the reasoning has changed. Okay. Now it's not number of trade lines. Now it's the average age. So now the credit bureaus are no longer, even with one account on the credit report, they're not saying that trade lines is the issue. Now they're saying, well, this person just started the business credit report. That's why they're not 100 out of 96, right? But again, we can see that even the bureaus feel the risk has changed. We can see they go from very high risk to very low risk. We can see that risk of going bankrupt has dropped from high risk category down to middle risk. And they still don't like the number of accounts they have or the employee size. But again, those indicators will go away when we add more credit. This person only has one account on their business credit report. This is the one account they have. It's a U-line account. And they spent less than $100. But because they got one account and spent less than 100, they jumped this score from a 28 to a 96. They jumped the recommendation of credit from 1,000 to 2,500, 2.5 times the amount, just because they added one account on the credit report and paid as agreed. And then if we continue down and we look at this third report that we pulled up briefly, now we start to see an even bigger jump, right? This depicts on how they actually pay their bills. So we've got some late payments here. But even with late payments, that financial stability score is the highest we've seen, because now they're getting lower and lower risk of going out of business the more credit they establish. And look at this. The recommendation of credit's up to about 16 grand now. And we can also see here that a low number of recently reported commercial accounts, length of time on file. So these risk factors are changing from the Bureau's perspective. We also see that here's somebody that has 3, 4, 5, 6, 7 accounts on their business credit reports. So the reason I show you this is that as we add more credit, we start to see that from the lender and credit issuer's perspective and credit bureau, our risk lowers because we build more credit. We should be lent more money per the recommendation, and the rates we pay will be lower if we're paying our bills as agreed and getting good scores there. So some things to think about. We got Missouri in the house. We've got Maryland in the house as well. North Carolina is here, and the Love Queen is in here from Houston. And of course, as always, the ever so popular, brilliant Davis from Unbound Business Solutions is coming in from Tucson, Arizona. Thanks, everybody, for chiming in and for saying hello. So we got to build business credit. Now, of course, we can always help you with this. I'm not here to self-promote. I feel there's two paths you can go. You can go the path that takes longer time and gets you, good, decent results. Using free training, or you work with a source where you actually will spend the money, invest with an expert, get a lot better results a lot faster, right? And with us, credit monitoring, 411, not paying D&B for the credit builder, we save you more money than you'd ever spend doing it on your own. And we've even got sources that will finance this for you and have really cheap payments, like a couple $100, sometimes even less, to be able to get started with us. So it's really cheap and easy, and you get access to the vendors and the fundability and the advisor to walk you through this whole process. So don't forget that we're here to help you expedite along the way. But even if you're not working with us, then you've got to get access to vendors. You've got to continue this process of building business credit. And here I'll show you what gets us the positive reviews that we have, because if you just follow the same path, whether you're working with us or not, you can get way better results. Now, you've also got to monitor your business credit reports. If you don't see what's going on those credit reports, then the problem is that you never know what lenders and credit issuers see. Okay. And that's the problem. I was talking to that buddy that said, hey, I don't even know what the problem is, why I got turned down. I said, get your business credit reports and figure it out. He did. And then one of his questions was, well, how do I cancel this now? I'm like, are you crazy? Why would you want to? You just got denied for an auto loan because you don't have your business credit established. For $24 a month, you can see your credit reports any given time. And you want to cancel it and go back to where you were with no idea what's going on and continue to get denied. You got to monitor your business credit reports. If you don't know what's happening there, you don't know what lenders and credit issuers are seeing, and you're giving them an unfair advantage. You want the unfair advantage. But you can see here's our step for building business credit. We're building that fundable foundation right from the beginning. Then we're getting our DUNS number, getting set up with the reporting agencies. Then we come in and start building business credit in these different tiers. We're monitoring business credit. So it goes to show you the importance of everything I'm saying. This is how our clients take years off the business credit building process. They come in and they know step by step the credit that they're able to come in and actually get approved for. They're able to come here and see the actual underwriting guidelines for every single source so they know they can get approved before they apply. They're able to see where they report because they can build credit faster when they get credit with sources that report to more than one reporting agency. They get the special VIP link to be able to come in and get approved for the credit. So this is the kind of things that will expedite business credit building, but it's also the map that you need if you're doing this on your own. So even if you're not working with us, you can see that, building that fundable foundation, getting set up with the reporting agencies, getting credit that reports, getting credit monitoring to see what's reporting, then getting tier after tier after tier of credit opens up more credit and financing for you. But it also is the key to effectively building business credit. So we can see here that we're able to come in tier 4 and get auto financing. We're able to get a Visa card, MasterCard credit, what we call bank credit. There are all these banks that will start issuing credit. Okay, we're able to come in and get auto financing for places like Ally, Ford, Toyota. We're coming in to get computer leases from people like Dell, from HP, from Apple as well. So all of this kind of money becomes available once we've actually established business credit. Got about 14 accounts on our business credit report. So that's really the key to really showing lenders and credit issuers what they want to see. Okay. And again, you want to make sure that you're monitoring your business credit reports to see what's happening. Is there negative, disputing any negative, fixing these type of things. Dun & Bradstreet just had a big issue with the FTC. The FTC did an investigation and found that Dun & Bradstreet was not properly investigating disputed accounts. And they laid down the law that said, hey, you got to now. So all of a sudden, for the first time ever, there's actually precedent set for them to actually go in and dispute your items and requirements they have to meet to keep items on your credit reports. So it's easier now than ever to monitor your reports and to be able to challenge them when there are things on there that you think are negative that need to actually be removed. Okay, so remember, you've got to build that business credit portfolio. It's not just a matter of building business credit and getting credibility with lenders, credit issuers, insurance. It's a matter of easing your cash flow requirements. And what I mean by that is that when we spend money on Facebook ads, I can either use a Visa card, or I can use my debit card and take money out of my bank to buy those, or I can use a business credit card, a corporate credit card with the Visa or MasterCard that doesn't report on my personal credit report. Now, by using the Visa card, I continue to build business credit. I continue to tell lenders and credit issuers that I'm spending this money. I also keep more money in my bank to spend as I need. Then when I start getting a return off my spend, I can pay off the credit. This is how the smartest companies in the world run their businesses. And if we think about that, I can come in and I can spend $1 million a year on Facebook ads. And if I use my debit card for that, nobody ever knows that I'm doing that. I'm taking the money from my bank and giving it to Facebook. But if I get a Visa card that reports on my business credit reports and I spend that $1 million on ads, now that $1 million in spend is showing on my business credit reports. Now, when other lenders, when other credit card issuers pull those reports, they see I'm spending that money and they're eager to want to give me money because not only am I being issued credit by other people, but I'm using the credit. And that's who they want to give the money to, is the people that are actually using that credit. So by actually coming in, and then, of course, I keep more money in the bank, ease cash flow requirements, and whatever I'm spending the money on, I get a chance to get the return on that before I actually have to pay the bill. So if I'm coming in April and I spend $10,000 on Facebook ads, well, then I can pay a little bit on the credit card. And then when I get the sales from those ads, right, people see my ad, they come in my funnel, they buy my stuff. Then I can use the money they use to buy my stuff to pay off the credit. Again, this is how all the biggest companies in the world operate. I oftentimes use Walmart and Apple as examples. 80% of what Walmart sells, they do this with. Walmart has more equity in the company through business credit than all shareholder value combined. Business credit's more valuable to Walmart than all shareholder value in the company combined. And this is because, again, 8 out of 10 things they put on their shelves, they bought with credit. They use your money when you buy them to pay off the credit. It's how they keep more money to expand. And that's how Apple does it as well. They all keep debt and they use credit to grow their business. Then they keep money in the bank for things that they need the money for, like expanding, like for Walmart to be able to create more stores, for Apple to create more stores, for Apple to work on research and development to create more products. This is why these companies get as big as they are. They're very good at using other people's money to keep more cash on hand. And Jamal, thanks for coming in. What site is that to check my business credit report? You can get it from a lot of different places, but the best place to go is creditsuite.com/monitoring. If you go to creditsuite.com/monitoring, then it's only $24. If you go directly to the credit bureaus to pull them like I did, it's $250 a month. So if you go to creditsuite.com/monitoring right here, you're able to get business credit monitoring for only $24. It's really the cheapest and easiest way to be able to get your credit reports, or you can go directly to the bureaus to get it. It's just a lot more money. Chicago is in the house. Thank you for coming in and saying hello. And thank you very much, Mayataka, for sharing. Mayataka is sharing this to other people, bringing them in. And I really appreciate you doing that. North Carolina is in the house too. And we've also got the Love Queen. I want to talk to you about being a customer to build my business credit. We can definitely help you with that. And I'll give you our phone number at the bottom of this, and you can give me a call, send me an email. We can talk more. So remember, business credit portfolio is really everything that's on your business credit reports at the total of all these vendor accounts, Visa card, MasterCards, auto financing, everything that reports there. Okay. And again, this evens out your cash flow because less money is being spent out of your bank account and credit's being used to be able to grow the business. Now, you don't want to neglect personal credit. Personal credit's still going to come into effect for SBA loans and other kind of financing as well. So just because I'm telling you to build business credit doesn't mean you should neglect personal credit. Okay. Plus there's scores like the blended score from Experian, the FICO small business score, which takes into account business and personal credit. So anybody that tells you personal credit isn't important, they're lying to you. It's very important when it comes to getting money in the lending space, but it's not important for getting credit cards. You can get business credit cards with $20,000, $50,000, $100,000 limits without a personal guarantee, without a personal credit check, without collateral, without cash flow, even as a startup. You can get all kinds of credit cards. But when you go to SBA loans and different kind of financing, a lot of times credit lines and loans down the road still may take into account personal credit. So some things to keep in mind. So look, you've got to expect that lenders and credit issuers are going to pull your business credit reports. And if they're not established, if they're not good, you either need to expect to get denied, you expect to get smaller approvals as well, or you also expect to not get as much money as what you could get. So if you want to be able to get approved, get the most money at the best terms, then you need to know people are checking your business credit reports. If you don't want clients and prospects, competitors, investors to see something that's not good on your credit reports, well, then you really should focus on getting them and building them. So if you want to learn more, then give us a call, 877-600-2487. When you give us a call, we'll do a finance assessment with 3 things. We'll do a fundability check to tell you what's wrong with fundability and what to fix to improve your chances of getting credit financing. If you think you have business credit reports, we'll get them for you for free. It's 100% free. Now, we pay for them, but we get them for you at no cost, okay? We take a loss to be able to get them for you because we feel it's important enough for you to have them. Only place in the world you can get your credit reports for free. Whether you have business credit reports or you don't, we're going to give you tips and tactics to build your business credit. And we'll also do a funding qualification. We'll tell you all the financing you can get right now as well. And don't forget, if you got value from this, hit the like button, hit the love button. You can also go to creditsuite.com/business toolbox And there you can actually learn how you can get about $400 worth of cool business credit building tools just because you share our next live stream. And speaking of our next live stream, if you want to follow along, go to creditsuite.com. Less than 1 minute to like and subscribe to our social channels. And you want to because we have daily tips on Facebook and Twitter. We have 1 minute tips videos through Insta, through TikTok. We've got thousands of videos on YouTube, a podcast you can listen to on the go, all of which is about helping you get the money and helping you grow a successful business. So make sure you like and subscribe as well. So thank you very much for tuning in. I love you, House. As excited. Jamal, thank you very much. I appreciate that as well. And Tarasha actually shared DMB's website as well. I appreciate you all working together as a community. That is exactly why I love entrepreneurs. So thanks for tuning in. I look forward to seeing you on our next training where we talk about more cool ways to get the money you need to start and grow your